Hi, I'm Rebecca Hidalgo Rains with Integrity All-Stars over at Berkshire Hathaway. And
I'm Eddie Rodriguez at Fairway Mortgage.
So, believe it or not, we've actually been friends for nearly 30 years. Shh, I know, right? Since like the age of 2. Actually, not really. But we both have been in the market working in real estate and loans for decades now. Me, yes. 22 years. Eddie? 18, so long time. And the reason why we're coming to talk to you guys today is because my good friend here is telling me about this mortgage product for my mom, which I'm super excited about because now she's getting to the age to retire and thinking about relocating to Arizona. We're trying to figure out how to help her get the most house as possible. And I always heard negative things about reverse mortgages. He's setting me straight, and I trust this guy because he just did it for his own mother. Can you tell me about it, Eddie?
Yeah, reverse mortgages, a lot of bad information out there and bad press with regards to the reverse mortgages, with individuals losing their homes and things along those lines. Well, that can be the case, but in most cases, that's not what actually happens.
That's what I'd always heard was basically I was afraid if my mom took out a reverse mortgage, she'd end up homeless at some point. What you were telling me though, as long as there was 40 to 50% equity, correct me if I'm wrong, she only has to pay like taxes, insurance, if there's an HOA bill or whatever, that too, but there's no mortgage payment when she does a reverse mortgage. And I was trying to explain it to her how that worked. I was kind of butchering it. So can you explain that a little bit better?
Sure. Yeah, that's exactly right. They are only responsible for making their taxes and insurance and any HOA dues, but they have no mortgage payment. They are living mortgage free.
So how does that work though? I mean, how can they live mortgage free, and what happens if they sell before they pass or pass it on to their heirs? Where's that equity in play? Like, how does that happen?
The equity is still there. It's working on a reverse scale. So on a forward mortgage, you're paying your mortgage down. On a reverse mortgage, you already have the equity. So the interest,
the balance just goes up
backwards. Yep.
Okay, so that makes sense. Because that means that's why you have to have the 40 or 50% equity when you take out the loan, because instead of paying somebody a mortgage, the balance is just increasing.
Correct.
So what happens if it increases to the point of where now the home is upside down? Are they then evicted from the house? I think that's the fear, is that they're going to end up homeless.
Yeah, no, they're still protected.
How's that work?
They've exceeded their cap, and that's it.
So they just stay there forever,
They stay there forever, until they end up passing. When that time does happen, the property, the children, the heirs have the responsibility to just sell the property. So they work with an agent.
Does that mean that there's actually equity in the property when they go to sell in some cases? Or does it just depend on how many years they had that mortgage, where the balance is versus where they originally took it out?
Correct. So depending upon the market, we've come out of a bad market. So let's say they had taken out a reverse mortgage 10 years ago, and the house went upside down, so they were already, there's no equity. That's okay. They still live mortgage free. Until they pass.
And that's guaranteed.
Correct.
Because that's my biggest fear is, I help my mom, or any other client for that matter, get into a home, they have the equity, they buy, maybe because I have an example of a lady I want to help right now. If we sell the home she's in today, which she can't afford to keep because it's just too big and too much maintenance, she needs to get into something smaller, I'm thinking she may have $40,000 to $50,000 to put down on a house or a condo or a townhome. And there are places out there for around 100, but my fear would be, hey, I help her get into this house, and then 10 years from now she's still living, great health still, and her son's mad at me because she's living with him now because she got booted from the place. So you're guaranteeing that if they did a reverse mortgage in today's world with the type of product you're selling, that can't happen. She would always get to stay in that house as long as she stays current on her HOA, her homeowners, and her taxes.
That's it.
Wow.
Yeah.
I'm going to get my mom on this right away.
Yeah, it's fantastic.
So what are the rates like? I mean, I guess it doesn't really matter, does it?
It doesn't necessarily matter. It does to a certain degree, but we can do an annual adjustable rate, we can do a monthly, we can do a fixed.
And you also said people can do cash out refinances too. So say they want to stay in their home they're in today, don't need me to sell a house or buy a house, but they just want to maybe access some of their equity. That's available too, right?
It's a great way for those retirees to extend their life with regards to their income.
Like, so maybe if they didn't have enough in pension or Social Security benefits or what have you, they could stay in their home, tap into their equity. Is it like a HELOC?
Yep, correct. It's a line of credit they have access to. So you hit on some great points. So when you retire, you have certain buckets of income. So you have your Social Security, and you have your IRAs, pensions that you're receiving. You have those two buckets you're drawing from.
Okay.
All we're doing on a refinance is drawing from that third bucket to assist in their living and their lifestyle.
And their living expenses.
Yep.
And then what happens to the heirs? Because I think, you and I are both in our 40s now. I know. And that means our parents are hitting 70-ish range.
Yes.
And so, but today everyone seems to be living longer. They're taking better care of their health. And in that situation, say I get my mom into reverse mortgage, we buy her a place for $200 today, and it ends up being worth $400, say, in 15, 20 years. Is it believable to think that when she does pass that there would be anything to give to the heirs?
Absolutely.
Really?
Yeah.
So as long as, it just depends on how long they were in the home, where the balance is versus the value of the home at that time, right?
Exactly.
Okay.
You got it.
So I think I got it. If you guys have any other questions, he's the one to ask, because obviously I'm still trying to figure this all out, right?
Yes.
Okay.
No.
Yes.
You got it. Yes.
But please try to get a hold of us if you have any questions. My direct phone number is 480-243-4242. And Eddie?
480-221-7800.
Both pretty easy to remember. Give us a call.
Have a great day.